All right, all right, all right. Hey guys, how you doing? It's Dr. Greg McLeod from Big Traders University, and let's go ahead and pop that up here, and let's get back to the screen. Hey, got it. Okay. And a good morning, good evening, ladies and gentlemen. This is Dr. Greg McLeod from Elite Traders University. Welcome to Bulls versus Bears, the weekly Forex forecast, broadcasting to you live from Austin, Texas. And we're going to have a great show today. We're going to be looking over the economic calendar and upcoming trading setups for this week. So let's get started. And I'm going to go ahead and share my screen. Make sure you can hear my voice and see my screen. And so let's go ahead and do that. Share screen. We're going to share the first screen right here. Screen number 1. Share. All right. And there you go. We're going to share the screen and we'll get into the. Oh, nobody going to see that. I don't see myself. Okay. How you doing? This is Dr. Greg McLeod. And we're going to start with the economic calendar. And the economic calendar is our key to looking for trading opportunities. We are looking at the economic calendar here on My Market Heat Map. My Market Heat Map is our one-stop shop tool for looking for trading ideas and setups. It has a graphical interface, tells us what's hopping, what's popping, what's dropping in the market with coordinated tiles. I'll show you what that looks like. We'll go to My Market Heat Map, and we can look at like all the Forex pairs, and we can, if the market were it was open right now, we would see these colored tiles. Green or means we're in an uptrend, red we're in a downtrend, and gray stay away. So right now, actually, we have some activity in the market right now. Um, we have the euro yen up 0.27%, and also we have the dollar Israeli shekel that's also in the top part of the heat map as well. In Saudi Arabia, the banks are actually open. So actually, there's currency exchange going on in the Middle East, even though markets here on Saturday for most of the world is closed, right? So, but let's go ahead into so there's different heat maps. There's equity heat maps, commodity heat maps, crypto, Forex majors. There's also trader tools like charts, quotes, economic calendar, Forex TV, a financial news stream, and market hours, technical analysis indicator, and sentiment, and a number of other calculators as well. Position sizing. There's also tutorials and videos as well. Choosing a broker, opening a trading account, how to find bullish trends, how to find bearish trends, how to trade in the gray zone, and a number of other things. And plus some bonuses as well. So let's go ahead and go right to one of the trading tools I like looking at to start my analysis. I like going to the economic calendar that's also found in my market heat map. You can go to www.mymarketheatmap.com and scroll to the bottom and also have access to the economic calendar. And so let's look at, November 11th. I want to wish a happy birthday to my daughter who was born on 11/11. Also, a happy Veterans Day to our veterans. Thank you for your service. We want to thank the veterans out there. Um, and so very awesome things. So we're going to go right to Monday the 13th and check out, I call this Fund with Flags. And I call it, like this on Big Bang, Sheldon and his girlfriend Amy, they have a little show called Fund with Flags where they highlight a flag. I call this show like Fund with Flags because we can actually look at the flags in the economic calendar and it'll give us opportunities, tell us what the big boys are actually looking at trading in the market. So if we look at Monday, November 13th, we see at 6:30 p.m., we're going to have the Australian dollar, the impact news, Westpac consumer confidence change. We're looking at a change from a drop from 2.9% to 0.7%. That may have a negative impact on the Australian dollar, and we'll look at the technical picture right after the economic calendar. 7:30 p.m. we have more Australian news. We have the NAB business confidence, looking at a drop from 1 to -1. And then Tuesday, November 14th at 2 a.m., we're looking at UK climate change count. Climate change, they're talking about jobs, the number of unemployed people, and we're looking for a rise from 20,000, 20.4 thousand to 25,000. Okay. And I would tell you that good news is bad news is good news and good news is bad news. Because if unemployment rises and the economy slows down, it also means inflation is coming down too, and the central banks are achieving their goal, and their goal is to increase unemployment in order to slow down inflation. People who don't have jobs can't buy stuff, and that's why central banks like the Fed, the FOMC, are hiking rates and looking. They're data dependent, and they're looking at employment statistics like non-farm payroll, like the claimant count changes, in order to determine if these interest rates are negatively impacting jobs, which would bring down inflation. We can see UK unemployment rate as well. Looks like it's going to tick up from 4.3% to 4.4%. Again, that could be positive for the pound sterling. 5 a.m. We're going to have the European CEW Economic Sentiment Index. It's going looks like it's going to rise negative 1.1 to 5. And then we also have some more Euro-centered data, the gross domestic product or GDP growth rate year on year. That's going to drop from 0.5% to 0.1. As we see those, again, negative news should be good news for the euro because those interest rates are actually slowing down GDP and growth. Okay. So I know it sounds kind of backwards where central banks actually want to see the economy slow down in order to lower inflation. But that they have a 2% target. The central banks are targeting a 2% inflation target. And right now, the current inflation rate hovers like around 3.9 to 4%. So they're trying to actively get that inflation rate down to avoid the inflation rates of the 70s and 80s, which the central banks fear will erode buying power and create price instability. Remember, the central banks, the dual mandate of the Fed is to provide price stability and also full employment. But sometimes those two mandates, they conflict with each other because in order to have price stability, you have to reduce employment. So that's the problem there. Okay, 8:30 a.m. on November 14th, we're going to look for our U.S. news cycle. We have two U.S. news cycles, one at 8:30 a.m. and one at 10 a.m. The first batch of news that comes out of the U.S., we have core inflation rate year on year. This is going to be a biggie because it's going to determine the movement of the U.S. dollar. Remember, 85% of all currency transactions occur with the U.S. dollar, the euro dollar, Aussie dollar, or pound versus the U.S. dollar. So we're looking at the U.S. dollar and looking at this U.S. inflation. They expected it to be unchanged from 4.1% to flat at 4.1%. Year-on-year inflation, though, looks to have dropped from 3.7% to 3.3%. Again, this is the forecast. If we see actual numbers that come out lower than expectation or higher than expectation, a higher number would mean that the interest rate hikes of the Fed are not working. If we see a lower number, then we would see a rally in our indices like NASDAQ, the S&P, and the Dow Jones 30 could rally if inflation is falling because the Fed won't have to raise rates anymore, okay? So this is going to be a very important Tuesday, November 14th, to be a pivotal time in the market for people to watch this U.S. inflation data. So it's very important looking at core inflation rate for month on month. It's not MOM, it means month on month, MOM. So they're comparing 1 month to the previous month. We're looking at unchanged at 0.3%. Inflation rate month on month, like that's the core. Core means absence of food and energy. I don't know who doesn't use food or energy, but they do calculate that number because I use a lot of food and energy. But inflation rate month on month, which includes volatile food and energy, we see that number fluctuating more because food and energy are volatile components of this inflation number. 0.4% was the previous number. A drop to 0.1% would probably set the market on fire on Tuesday. So look to possibly position yourselves long in the in the event that we do have a lower than expected inflation rate month on month at 8:30 a.m. Eastern time. CPI, or Consumer Price Index, looks to remain relatively the same, 307.78 versus 307.8. Not much movement there. Then later on in the evening, we'll have some Japanese data. We're going to have the GDP growth rate quarter on quarter, and it's supposed to dramatically drop from 1.2% to negative 0.1%, which probably will not give the Bank of Japan any cover to raise interest rates anytime soon. Right now, they are one of the few G7 countries or G8 countries that actually has negative interest rates. And that's why the Japanese yen continues to be the weakest currency versus other currencies. As they stimulate growth, they also using currency devaluation to increase the export, lower prices of their exports, because it's Christmas time, guys. And this has been going on for like 63 years, that they normally reduce or actually lower the value of their currency on purpose in order to make their exports cheaper, because they're an export-driven economy. And so that's why traditionally November is always positive for the past 63 years. November has been very positive for the stock indices. And that's, because why? Because, the traders have to buy that G.I. Joe at the Kung Fu Grip, right? That's what trading places, right? So that's why November, we had one November in 5 years, which was negative, and that was 2021. But most Novembers for the past 62, almost 70 years have been positive, because it's the Christmas season, guys. And Santa's workshop is not in the North Pole, but it's in Asia, in Japan. And that's why these Asian countries manipulate their currencies in order to lower the prices and increase sales. Looking at 7:30 p.m., we're going to have more Australian data. So the Australian dollar is going to be in play big time this week. Look at wage price index year on year. Looking at to increase from 3.6% to 3.9%. And then price index quarter on quarter, supposed to actually rise from 0.8% to 1.3%. And then finally, we're rounding things off. At 9 p.m., we'll have Chinese industrial production year on year, supposed to actually drop from 4.5% to 4.3%. He said, well, Greg, we don't trade the Chinese renminbi or the Chinese yuan. Why do we look at Chinese data? Because they are the largest. China is the largest trading partner of Australia and New Zealand. So we can look at the Australian dollar and New Zealand dollar as proxies that we can trade when we're dealing with Chinese data. If we have negative Chinese data, usually that, if China's economy catches a cold, well, Australia and New Zealand will catch the flu, because of their geographical location relative to each other. We'll see this retail sales are supposed to pick up from 5.5% to 7%, and that could be positive for the Australian dollar, right? Wednesday, November 15th, we're looking at core inflation. We're looking at UK inflation. Core inflation month on month is supposed to drop from 0.5% to 4%. Inflation rate year on year. 6.7% drop to 4.8, a dramatic drop. We'll probably see a giant move in the pound dollar this week. Core inflation rate year on year, if the forecasts are correct, we're looking for a drop from 6.1% to 5.8%. Inflation rate month on month is supposed to actually drop from 0.5% to 0.1%. Then we have some more U.S. data, 8:30, November 15th. We have core PPI year on year. We have 2.7% unchanged. Retail sales actually dropped from 3.8 to 2.1%. You may say, well, Greg, that sounds really bad. Retail sales have dropped from 3.8% to 2.1%. Yeah, and the stock market will probably go on fire, go straight up on the back of this number. A weaker economic number will cause the Fed to either pause interest rates or actually start thinking about cutting interest rates, which is something that's really not in the cards. That people say is not on the radar, that those interest rates would be cut. But we could possibly see an interest rate cut if the economic data comes out really, really negative, right? We're looking at retail sales month on month. We're looking for a drop from 0.7 to negative 0.1. And we have the New York Empire State Manufacturing Index. We're looking at a a rise from negative 4.6 to negative 2.6. PPI month on month for the US is also supposed to drop from 0.5% to 0.1%. So we're seeing weakness in some of the PPI data, for producer price index. We also have USD core PPI that's taking out food and energy, 0.3% drop to 0.2%. Japanese balance of trade is supposed to come out at 6:50, almost 7 o'clock. We're looking at a severe drop of 72.1 billion to negative 735.7 billion. And that really would push the yen lower. So those yen bulls expecting the yen to rise, rising during the Christmas time is usually in 72 years, it hasn't really happened. So they'll just keep holding their breath. We continue 7:30 with more Australian data. Again, Aussie is very much in play. The Australian unemployment rate is supposed to actually rise from 3.6 to 3.7%. Bad news for the average person, but good news for the stock market. Employment change supposed to actually change from 6.7 thousand to 18,000. Full-time employment change, negative 39.9. And they're not even given a forecast, so they'll probably get it wrong anyway. So they're not giving one. Participation rate supposed to remain unchanged at 67.7%. Aussie part-time employment change 46.5%, and they don't get a forecast on that as well. And again, they'll probably get that number wrong as well. November 16th, we're going to come up with initial jobless claims out of the U.S. A fairly highly watched number. It looks like it's going to increase from 217,000 for the month of September to 219,000. And then we'll finish off the week with Friday. We have UK retail sales year on year, supposed to drop from negative 1% to negative 1.5%. UK retail sales month on month actually rose from negative 0.9% to 0.3% as we get closer to the holidays. And at 5 a.m., we're going to have European CPI. Very little change, will rise from 124.43 to 124.55. Inflation rate year on year final supposed to actually drop from 4.3% to 2.9%. That would really cause a lift in the euro. So be watchful of that inflation number again at 5 a.m. Eastern time on Friday, November 17th. European core inflation rate year on year final supposed to actually drop from 4.5% to 4.2% as higher interest rates are starting to have their effect, their desired effect to lower inflation. And an inflation rate month on month final for the Eurozone supposed to drop from 0.3% to 0.1%. And is that it for Friday? And that's it. Yeah, that will take us in. We're going to have RBA meeting minutes that following Monday. But let's go on to the technical. I know you guys are like chatting in the chat box. Technicals. You're tired of the fundamentals, right? And sometimes news can be slightly and I'm hearing a lot. Chiming. Okay. All right, good. Okay. So, okay, move on to technicals, and we're going to go to TradingView. And TradingView is a good place for us to look at charts and analyze what's going on. We're going to start with the US dollar index. The US dollar index is a basket of currencies versus the US dollar and allows us to see the relative strength of the US dollar versus its counterparts. And okay, as it's coming, I'm sharing my screen. And it's spinning around. I'm using the airport internet. And I'm going to start off with the DXY. DXY is the symbol, the Dixie. And I'm going to go ahead and close this out and close some of these here. Okay, I've got some alarms that are triggering here. We can get rid of the triggers. We can get rid of the indicators and things, and we're get rid of our proprietary templates. Right? Okay. And I'm going to remove all drawings. And we want to go out to a weekly chart of the DXY. Very interesting, as we saw, we found a bottom in the 89.23 area back in May. We saw a high rally to 114.59, dropped down to a low of around 99.41, and then we rallied. But right now we're running into a lot of resistance in this 105 to 107 area. And you can see that we're moving in a sideways channel. We haven't made any new highs. As long as the dollar does not make new highs and we remain locked in this range, we've been in this 1, 2, 3, 4, 5, 6, 7 bars or 7 weeks of range, then we could probably see the major currency pair or major currencies rally against the US dollar. I'm ultimately bulls versus bears. We continue to remain neutral on the US dollar. But once we break below the 104.37 area, we can see a clear move back down to 99.51 as the dollar could lose its value if Chairman Powell announces that the rate tightening cycle is over and economic data starts to look weaker than expected. Then we would probably see a pause or more like a rate cut. Many are calling for a rate cut sometime in March. Let's drop down to a daily chart, and we can see that as we broke a trend line here back in November, early part of November, and we broke, and we're making structurally we're making lower highs and lower lows. We're currently at 105 spot 87. We have a low put in at 104 spot 78. We can look for maybe a high of 106.48, but we're just moving. We just made a lower low. And so if you make a lower high, then that would change, be a structural change in the US dollar. And we can see further moving down. So bulls versus bears, I am neutral to bearish on the US dollar. Let's look at the anti-dollar, which is the euro, and the ticker symbol is EURUSD. And we can see that we had a number of drawings, and remove my drawings. We're going to start off with that weekly chart, and we can see this weekly chart we have been making. If you back it up, we've been in a downtrend since the 2021 high that we saw at 1.2362 back in January 25th, 2021. And from there, we've been making lower swing highs and lower swing lows. You can see as we are traveling below the 20 and 10 moving average, the green and red lines on my chart, we hit a low of 0.9520. That was back in September 26th. Then we started a series of higher highs and higher lows that took us to a high of 1.13113, 13, guys. And then we dropped back down to a low, a pullback to the 1.0435 area. So we have a high and a low, but then we made a series of weekly highs from this little bit of support. I'm going to put that support line in there for you. And I can show you that we have a nascent uptrend. May not look very strong, but is making some highs. Seasonally, the euro usually rallies in November anyway. So this is really following a seasonal pattern that goes back some 70 years. And he said, well, Greg, the euro was even traded 70 years ago. It came about in 1999. But there was something called the European currency unit, the monetary unit, where when they were planning, they didn't just launch the euro in 1999. There was plans for this EMU currency unit many years hence after World War II. And so you could actually take the other currencies, the lira, the mark, and all those other currencies. There were a basket of European currencies that make up the synthetic euro. And so those were trending. So we see we're going higher highs and higher lows, right? And since Germany was like the largest economy in the Eurozone, basically the euro is the Deutsche Mark in drag, right? And we can see that from the low we put in October 9th, 2023, we've had weekly highs, higher highs and higher lows. We're in an uptrend. So bulls versus bears, we would be constructively long on the euro. And we look for maybe the euro heading toward the 109 to 110 area, or even as high as 112, given that this current momentum. Dropping down a daily chart, we can also see that we are crawling very slowly, but making new highs. And we have our trend now. If we broke the 105 area, then we could see a plummet right back to the 104 and even back down to 95. But right now, we're crawling a wall of worry as as many people anticipate that the U.S. dollar will continue to rise due to rising interest rates. But considering that Fed Chairman Powell skipped a rate hike for this month, and it's possible if he skips in December, they may signal the end of the tightening rates, and we could see a rebound in other currencies versus the U.S. dollar. So bulls versus bears. I am short-term bearish on the euro. Medium to long term, I'm seeing it make some new highs. Okay. Let's move on to the next currency that's in play, the GBP USD, which is the pound sterling. It's really the oldest circulating currency, continuously circulating currency. It has almost some 1,000 years of history being in circulation. I actually have some old trend lines that are drawn. If we're respecting those trend lines, we have a similar story here in the pound versus U.S. dollar. Higher highs and higher lows. And as long as we hold the trend line at 1.2180, we continue a move higher to 1.2434. And so I'm short-term bearish because usually on Mondays we get a pullback against the trend. I call it Manic Monday, turnaround Tuesday, Bowser Wednesday, Fat Thursday, and Freaky Friday when we reverse everything again. So I'm looking for to take positions long. If we get a pullback to trend line, pullback to 1.2184, and we could really see the British pound continue the clock higher. Okay, let's go across the pond over here to Australia and take a look at the Australian dollar. Again, lots of news out of Australia, and we want to see what opportunities that we can find in the Australian dollar. And we can move out to our weekly chart. And again, I like taking a big 50,000 foot view and looking at the larger time frame. I know many short-term traders, they don't like the higher time frames. They go, Greg, these are so far away. Why do we even look at them? And the reason why is we have levels of support and resistance on higher time frames. Statistically, those support and resistance lines in higher time frames have a higher degree of price responding to those levels and moving against them. So we look at a floor that was put in at 0.6281 and looking move to the upside, higher highs and higher lows, right? So we are nascent uptrend. As long as we can hold 0.6373, we could see a move maybe up to 0.6600, and that would be we can drop down to a daily chart, and we can see that we did pull back to trend line. We haven't got any response yet, so that's what we're looking for. Price to move higher. We broke this one trend line here that we can probably redraw. Let me redraw this trend line, right? So we're looking at 0.6348. You want to see some type of reversal. This trend line is not really confirmed yet until we get another candle. Once we get that other candle, a green candle, then it'll be I would look at a push to the upside. So we could probably get a move higher and a reversal candlestick pattern at this maybe whole number, round number support, 0.6400, and we can see a move back up to 0.6516. Okay. So let's look at so Australian dollar. We're going to go short-term bearish because usually we have a pullback on Mondays. Turn around Tuesday, we look for a rally, and we have some data coming out that can support the Australian dollar. Okay, and also look at the Chinese data as well, because Australian dollar is a proxy for Chinese growth. And if we see really strong Chinese numbers, we can see the Australian dollar also rally as well. Okay. All right. Let's look at the dollar yen because we do have some Japanese data coming out. And one of the top traded currency pairs is dollar versus the Japanese yen. It's been on a awesome, massive uptrend. Um, moving up from the lows about the 132 area down. We're up at 150, 147, some 2,000 pips. Just an amazing, amazing run up. And we're also coming up to an old high that we had back on October 17th, 2022, and the 152 spot 17 area. So we could form a double top, which is a bearish pattern. We would want to see a rejection from that area for price to come down. However, if we close on a closing basis, close above 152.02, we could see a move back up toward the 155 to 160 area. So there we are. We're really on a cusp right there. Japan needs a weaker yen in order to support exports, and so rarely does the yen pull back in November. Weaker yen is associated with risk on appetite. So I'm actually bullish. I would be bullish dollar yen at the 150.42 area, and I look for a break maybe toward that the 51.50, and 51.50 would open up the door to the unknown because we have not seen this area in probably 25 years. I mean, you have to go back to really got to go back to 1990. So like I was like 23 years. We were at this high. But once we cracked the high, we cracked 159.38. We could see an accelerated move up into the 240 area, which we have not seen since 1985, and that was based on a some type of market disruption. Usually, when we have large moves like that, of 5,000, 6,000 pips, there was some type of market disruption, and we're really close to some type of market black swan event market disruption if the yen appreciates that much, right? Where people are running to safety into the U.S. dollar for safety. So bulls versus bears. I'm bullish the dollar yen. Okay. Going back to our economic calendar and see what else we had on there. Well, we actually want to check out gold because I did launch a new gold course called the Gold Rush Profit System, and we're going to be focusing on trading spot gold. As gold had touched the 2,000 area, we're looking for gold to hit about 3,000. As gold goes in the opposite direction of U.S. interest rates, when U.S. interest rates starts to fall, we usually see a prolonged or protracted move up in gold. So we briefly hit the 2010 mark, right? And so we can close on a closing base above 2,097.62. We could see 2,500 in gold pretty quick. We rallied from the 1,800 area extremely quick, like in 3 days. We rallied some $200 in an ounce in gold. And so as long as we're above key moving averages and we are poised to continue to see interest rates drop, we could see gold continue to move higher as well. Let's take a look at the S&P 500, SPX 500. We're going to look at the CFD, and we'll take a look at that, right? Looking at a weekly chart on that, we're seeing higher highs, higher lows. You can see a reversal candlestick pattern that is very, very significant. We see a move back up to the 43.81 area in the S&P 500. Typical reversal that happens in November. November to remember. That's we can look for a move back up to 46.09 from the current 43.81 area. As we've made some higher lows in price, and we start to we had ABC correction against the trend. We hit a high of 46.35 on July 31st, 2023. We had a corrective low back to 4,100 spot 34 on the S&P 500, and now we're currently trading at 43.81 spot 35, and we can see first stop at 45.29 spot 31, and further highs to 46.02. Given the seasonality of the S&P 500, we continue to see it rally. So there's a lot of naysayers talking about recession and things like that. However, the seasonal patterns of the S&P 500 have been in place for the past 60 years. And so we only had 1 year in the past 5, which were negative for the S&P in November. So bulls versus bears, I am bullish the S&P 500. We're also trading above the 10 and 20 moving averages, making higher highs and higher structural lows. Okay, let's look at the NASDAQ 100. For those of you who are trading, you trade NQ or NDX 100, and we can look at the NASDAQ index, and we can see on a weekly basis, yeah, a really beautiful double bottom, a bottoming pattern. That's the NASDAQ there. You get another. You could go NQ as a or NDX. Let's try NDX. Yeah, NDX 100. That's our index, and we can see big push. The tech heavy NASDAQ. We after bouncing off a low of 14,088, currently trading at 15,529. We can see the high of the high that we had back on July 24th, 2023, hit at the 15,927 spot 43. We have higher highs and higher lows in the weekly chart. Weekly trend is extremely strong. The daily chart, we continue to make new daily highs for the past since the beginning of the month. We failed to break below the 14,000 area, and so we continue to move higher. So bulls versus bears, I am bullish on NASDAQ. Let's go ahead and take a look at BTC USD. Let's look at Bitcoin for your crypto people out there. And as the dollar again remains neutral to up, we could see a rebound. You see a big demand for Bitcoin as an alternative asset, especially during the geopolitical unrest that we've had in both the Middle East and Europe. And so we see a flight from the US dollar into alternative assets. And we can see that Bitcoin on a weekly closing basis, we hit a high of 37,967. Very strong move on the weekly chart. Daily chart continues to look bullish above its moving averages, above its 10 and 20 moving average. And so we look at the targets that we're looking at. I mean, we're looking at actually going back to its old high of 69,000. But we do have some overhead resistance coming in at 47.88. So that's about $10,000 move in Bitcoin. We just broke out of a flag pattern that we've been in, locked in this sideways flag since January 23rd, 2023. We had a low of like 25,000, high of 31,904. We had that breakout that happened, significant breakout on October 22nd, 2023, broke us out of the flag, and we have a price projection from that flag entry that will take us up to 44,061, 44,000, so about 7,000. But based on this other flag, we look for a move to 52,433. Okay. Bitcoin behaves like a risk-on asset, like pound or Aussie dollar or gold, and we could see that move. We have a high from May 10th. I got my numbers mixed up. May 10th, 2022 was a high, and we look for prices to come and challenge that high probably in the next several weeks. Okay. So anyway, that's going to be it for me for Bulls versus Bears weekly Forex forecast. Again, you want to learn more about trading and reinterpreting the market. We have a program with Elite Traders University, www.elitetradersuniversity.com. We help you become a professional trader in 90 days or less using our proprietary system. I've been a trader for 30 years, and I've worked for one of the largest Wall Street brokers. And my analysis is still being used on the internet. I don't even work there anymore. They still use my stuff. But anyway, come to Elite Traders University. We have some free resources there with an income boost ebook. We also have a free masterclass and our Forex Foundations course. Again, I look forward to serving you to your success. Happy trading, guys. This is Dr. Greg McLeod signing out. Peace and dips. Cheers. Bye-bye.